Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 20th, 2009. Well, a massive sell-off on Wall Street today, folks, across the board. We're seeing the markets absolutely get demolished after Bank of America came out with some disappointing earnings. Now, it's not that Bank of America did not outperform its earnings estimates. It did. And I've been stressing that in the premium videos to my subscribers for so long, how these companies are all going to beat, but it doesn't matter because when it comes down to it, they have to outperform the beat even. Meaning that if Wells Fargo, which was the first one to really kick things off a couple Fridays ago, came out and said, we're going to do 100%, then Goldman, the next one, had to do at least 100% to maintain its price. And then JP Morgan had to do it just as well. And then Bank of America. So Citigroup, General Electric, you name it, they all have to at least do what the previous player did. And if they don't, they're going to fall. Now, Bank of America did very, very well. There's no doubt in my mind. When you look at just the pure earnings area, that was a fantastic day, but it doesn't matter. Why? Because you have to look under the numbers, and this made me so mad, folks, and I don't mean to go off on a tangent, but when Wells Fargo had that day, folks, prior to the Easter holiday weekend, and it blasted up and took the whole markets up with it, I was so furious because they just came out and said, we're going to do this much, we're going to do 100% better than we expected. Well, guess what? That doesn't matter to me because I want to know the underlying market. How many defaults were there? How many of this? How many of that? Because if you get all your money from the government when TARP money's given to you, or you get a big paycheck from Citigroup or this or that or Wachovia or whatever it may be, in the essence, it doesn't matter because you're getting a fake money. It's a one-time infusion, and it's not going to last. So next quarter, the bank stops. You know, it stops, basically. Where's their money coming from next quarter? Where's it coming from the quarter right after? If their underlying loans are still in default or making more and more defaults, then the bottom line is it's not good. And that's the problem with Bank of America today. Bank of America absolutely getting slaughtered, folks, and I can't even tell you. Just an unbelievable drop here on Bank of America today, down over $2.40 on the day, down to $8.20. And we had actually initiated some great positions on Friday for our premium day traders in the chat room and the Premium Research Center subscribers. We had told everyone on Friday we initiated an FAZ at $8.60. That is now trading over $11 in one day. So if there's any reason to come and join, guys, for the premium guidance and education, it's right there. I mean, we talked about QIDs added on SDS, SRS, FAZ. These are all positions our pro traders added on Friday, knowing we had a key pivot day for today for a big down day, and look at the move we're getting. Huge move. Now let's talk about the charts here, guys, because the gold, I'm just going to talk a few commodities here. Gold is actually up, but commodities overall getting slammed. Gold's up $19, while oil and the rest of the commodities are getting slammed. The S&P's down 32.5 points, the Dow down 252, and the NASDAQ down almost 60, down about 58 points. All right, oil, as I mentioned, is getting slammed as well. So you're really seeing commodities are dropping, but why isn't gold? Well, because gold is a fear index, folks. Remember gold's fear index properties. Now let's look at a couple other things here, folks. You can see the market on Friday made a new high. We had called this the Great Wall of China. Now, why? Because if you go back on your 60-minute chart, you can see the Great Wall standing up. Now, what did that mean? It meant there was a high probability. We put together our cycle analysis, which, by the way, no one else was doing out there. I can't tell you how many media outlets, whether it was CNBC, Fox Business, Bloomberg, were all talking bullish statements. We're out there saying, guys, expect a fall to our premium subscribers, and they're all making tons of money today based off of that, folks. Fantastic stuff. All right, obviously, in these free videos, I don't give you that insight. That's what you got to have the premium stuff for, obviously. Otherwise, we wouldn't have any premium service if we didn't give out that special stuff to them. But nonetheless, look at the match right into the Great Wall of China, as I coined the phrase on Friday's video, and now you see the gap down. You were gapped right into the 200 moving average. Now, every level here is a trend line analysis level that you have to know. Now, notice how each one of these levels that I've drawn in is a key level. Now, notice the gap down, and what do we do on the first candle, second candle of the day? You close below the 200. That's a bearish indicator. If you can take out a moving average that easily, you have to be on watch there for more downside. Sure enough, the downside comes, goes to our next level. Notice our next level right here at 86.60 to 84.60, 84.70. Notice how you have pause candles right across. That's telling you there's support. There was actually some good scalp longs there that some of our traders in the chat room played for a beautiful scalp to the upside before it broke. It's paused for two candles. candles, then broke lower to our next level at 84.25. Look at the pause on this. Beautiful sideways action. You get some bottoming tails. That tells you a little bit of a bounce is coming. We get a very minor bounce before the market restarts down, makes a new low just a little bit below, and then pauses and rallies right up into that green trend line. Remember, this green trend line right here, when it's broken as support, here's support. When it's broken, it becomes resistance on the upside, and sure enough, the market trades right up into that beautifully before selling hard over the last 30 minutes of this market. Beautiful sell-off here, folks, as we are now hovering on support at 83.75. This is definitely support right here, folks. 83.70, 83.75 is good support in this market. We may get a bounce. I would not be surprised to see a little bit of a bounce. Whether or not we go lower later in the day is up in the air, but the fact of the matter is, this is very, very, very good support right here on the markets. Notice the bounce, just as I say that, folks, that this is major support. You're getting a little bit of a bounce starting up. Green candle formation on the spiders. That's what it's all about. All right, guys, just another check. Look at Bank of America. That'll tell you everything. Financials getting slammed. Goldman, of all the financials, is doing the best today. Doing not too poorly, but the fact of the matter is, this is a financial drop in the markets, led by the financials to the downside. A beautiful sell-off, almost 60 points on the NASDAQ, almost 250 on the Dow, and it was long overdue according to what we had said last week leading up to this, where we allowed our premium subscribers to have the advice to pick up, as they're just following what we tell. Basically, I tell them what I'm doing. I tell them what our traders are doing. It's up to them if they want to follow. I know a ton did and are doing very, very well, as the emails have flooded in today about how well they're doing, and our pro traders as well in the chat room. So come join one of our premium services. We'd love to have you, folks. Just a quick note here. If you get a bounce, and you look at the bounces continuing here, guys, we just called this. It just shows you how accurate these levels are. These are levels, I had this in even before I started this video here, and now you're seeing the bounce right off this lower purple trend line. What you're watching for is a bounce back towards this 20 moving average. Notice the 20 moving average sloping lower right here. It's going to probably be somewhere in here. That'll be first resistance. If you bounce through that, then you're going to go to the second resistance, which will be this green trend line at 84.25. Those are your levels, folks. Join the Research Center. We'd love to have you. The Pro Trader Watch List, Daily Market Report, nightly videos, 30 minutes in length or more on technical analysis of the markets, current markets, technical tactic, hidden gems, you name it, all inclusive on that Research Center. Hope to have you with us, folks. Take care. We'll talk to you tomorrow.